Hey, it's Fat Albert. Guys, check this out. This is what an awesome nephew looks like. Holy Toledo. What is up, everybody? Welcome to Trey's Trades, where we freaking talk fast and slap the ask, baby. I like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So, I want to start off here and just show you something really quick. This is pretty cool. So, the German market is actually open today, and as it sits right now, they're up a pretty good little schmeckle. They're up 11.41%, which is absolutely beautiful, baby. That would come out to just around $30 in USD, the US American dollar, which is good stuff. But nonetheless, my friends, I want to give you the update that we typically would on Fridays, because I did not put out a video on Friday, so I want to give you guys my thoughts on a couple different things. So we're going to go over the ortex data. I'm going to go over the short volume percentage. I'm going to go over the Stonko tracker, which shows the call options that are in the money, about how many shares are available to borrow, and then finish this sucker off by showing you the technical analysis on what is happening with AMC stock as it sits right now, my friends. And give you an idea of a couple different directions that this can go leading into the next trading day. So, without further ado, baby, let's get into the video. So, as you guys know, very, very solid price action is happening here in Germany as it sits right now. And I think that is for good reason. There's a lot of hype and anticipation that is rolling into AMC stock every single day that this inches closer and closer and closer and closer to the squeeze, right? This has been asked quite a few times. Trey, these pullbacks, these dips, does this mean it's over? Does it mean we're in trouble? And the answer is simply no, right? It's very, very, very simply no. And it's because you're going to see there's going to be dips along the entire journey. I'm going to get into this more as we get into the video and the technical analysis, but you should not be scared of dips. In fact, you should embrace them and view them as an opportunity to buy stock if that is what you want to do. So looking at the overall ortex data, you can see that the utilization is staying about the same. Does not change a whole lot. And the shares on loan have also stayed pretty decently consistent. They're up about 3 million or so. There was at 130 million, I think, on Wednesday or Thursday. So there are actually some lenders out there who are taking on that extra risk to borrow stock from other people, other available lenders, to give out to the market to short or to short themselves, right? The short interest is continuously going up. It makes no sense. How many times we got to teach you this lesson, old man? It's absolutely absurd. So that's looking good. You got about 85.57 million total shares on loan short interest. Keep in mind, ortex gives you about 85% of the exchange reported data, right? This is only what is available to us. This is what they are choosing to report. And we know that you're only getting a part of the picture because of the fact that there is sometimes malpractice, fraudulence, and corruption that takes place in terms of what is actually reported to the lenders and the stock data, the short interest data, exchanges like this ortex website. So all in all, still trending up, has not been the squeeze, still not the squeeze, still freaking live cat, guys. This is the beginning. This is the beginning of the end. This is the beginning of the end game. And even still, the shorts have not covered and they continue to add to their positions. So that's what you're looking at right here. In terms of the overall short actual volume percentage, last Friday on the 28th, you actually saw a little bit of a decrease. There's about 43% volume, short volume percentage and 55 the day before. Now, I've got some hypothesis as to what this could be, right? I'm going to take the worst case scenario. I'm going to say that number is actually true. Who knows, right? We're going to take the worst case, best case. Worst case scenario, that number is true. What you have here is some profit takers in terms of swing traders or day traders. It's entirely possible, right? I can't guarantee you anything because I know that 90-95% of the apes who buy AMC stock are holding AMC stock for the eventual run-up that is to come with the actual squeeze, right? But it's a potential possibility, right? We can't take this data on the good days and the bad days and flip our positions and opinions just based on the bias that we want to feed ourselves, right? It couldn't just entirely be possible that, hey, that's all the short volume percentage was on the day is 43%, which is still astronomically high. You couple this along with maybe some day traders or swing traders that were getting out, taking some profit when it ended up hitting $36. It's entirely possible. There's also this pivotal point to note, and that is the overall movement that you saw right here, right? So let's just kind of take a little bit of a swing at what this looks like. So this would be 100% retracement. They're up to about 36.72. All that I can do is estimate, but this has to be pretty dangerously close to a 150-ish% retracement, which actually come out to a level of resistance that we can get into down the road once we get into the actual technical analysis of the stock. But you can obviously assume that 36.72 is going to be that next huge level of resistance. So still being very heavily shorted. Shorts are still doubling down their positions. There's a lot of great stuff happening here in terms of them digging their grave and raising that overall ceiling, right? The more organic growth you get out of of AMC stock, while the short interest stays relatively the same, they do not cover, they double down, they don't. The longer this plays out, the more it continues to run, the more chance you've got of ultimately reaching that ceiling, that floor that you were looking to accomplish, right? So this is beautiful, beautiful stuff to see. But I'm absolutely jacked, honest to God. This is sitting as good as it gets. They continue to short and double down on positions, even though they're getting squoze to death. I mean, the losses are in the billions for AMC stock alone over the last week. So I'm absolutely jacked to see that. They can keep that ball rolling as much as they freaking want, because eventually they're going to get buried. Next thing I want to show you is the available shares to borrow, which is about 500,000. Keep in mind that Stonko Tracker only takes limited exchange data, so this is not the whole picture, it's a generalized trend. Just as I mentioned before with short interest, right? You're not looking at this to get the entire Mona Lisa picture, not the exact real short interest data that is available to the actual apes out there, but to watch trend, right? And the trend here is that there are a few more available shares to borrow. Now, I can't show you what ortex had on last Friday, but I did see that the short interest actually went up. It went up about 2 or 3% by the end of the day. So the fact that there's about 500,000 could be a couple different things. It could just be that there's more available shares to borrow in terms of lenders giving out more available shares. Since ortex does say that there's about 3 million extra shares on loan that could be available to actually short into the market, right? So 500,000 is still a pretty small number. You can see that there was a couple of shorts that may have gotten out of their positions. I mean, honestly, a lot of what you're seeing right here was updated after May 28th, because you close out the day May 28th with 100,000 shares, and now all of a sudden you've got 500,000. So the only thing this can lead me to believe is that, hey, there are just actually more available shares to borrow, maybe from other lenders who are, allowing shorting into the stock itself. More ammunition for shorts means more squeeze and more lemon pepper tendies for the freaking apes out there. So don't be stressing over this. This is just what the actual data is looking like as it sits right now. Now, last thing I want to touch on is the overall technical analysis of the stock itself, right? Now, what we saw here on Friday was a break, and potentially, it could have been potentially, just based on what you're seeing here, a false break over a level of resistance and a consolidation zone. Now, I don't mind seeing that it sold off of 36 bucks, right? The only downside of this is if you were playing call options, banking for some really deep out the money calls that didn't end up coming to fruition, right? That's a worst case scenario here, obviously. But what I do like to see is that it bounced back into this consolidation zone between $25 and $30, right? We want to see a little bit of trading sideways action in that zone, and that shows overall relative strength, because if you look at the overall strength of the chart from this run up to $12, it's very, very solid. I mean, we haven't come down to that 50%. We slightly touched down at 50% retracement here at $24.40, but then bounce right back up off of that. So that shows some pretty immense strength in terms of the buyers and the apes out there who are holding up AMC stock. And this dip, my friends, was on the horizon. I mean, you look at the RSI, the relative strength index. This gives you an idea of when stocks are overbought or oversold. Anything over 70 is typically overbought. Anything under 30 is oversold. This was up over 70 for like 4 or 5 straight days. It got all the way up to 90. I mean, that is drastic bullish momentum, right? So to have a run up of like 200, 300% from 12 bucks all the way up to 36 over the span of about a week, I mean, you're going to have dips. You're going to have pullbacks. That's ultimately what comes with this sort of price action, especially when you haven't even begun the short squeeze yet. You definitely had some gamma squeeze here. I'm not going to lie. You had call options that were previously out the money. They ran in the money. They had to have gotten hedged for, right? That is an indefinite truth, in my opinion, right? But look at this. Look at all of the new call option contracts that are available to the apes out there now. They go up to 73 bucks. 73 freaking schmeckles, guys. I mean, this just shows you how much true potential is here with AMC stock. They're starting to write up those new call option contracts because it's so dangerously close to that $40 maximum that was previously on the chart. So that's looking pretty freaking solid. The volume on this has been absolutely absurd, and I've said it a million times. Volume is going to drive volatility, and volatility is going to drive either higher or lower price valuations. And the problem with the lower price valuations is that since most apes are selling, typically you're not going to have high volume on red days, right? Especially, I think the reason why you saw some high volume on Friday is because it started off the day green, right? We hit $36.72. This is the first little sign of rejection that we saw over this huge run up that we just previously had, right? Now, this is uncharted waters. We touched a new all-time high on AMC stock. That's as high as it's ever been. It's $36.72. Check this out. And it's by a pretty decent margin. I mean, before the highest we had seen was what appears to be about $33.51. So, I mean, that's a pretty drastic new all-time high for AMC stock. So there's a lot of what ifs, right? We don't know exactly where this can go because trend right at this point is a little bit out the window. But I'll give you two different scenarios, right? This is what I personally think is possible and what you could end up seeing on Tuesday. Now, I'm taking into consideration the overall hype, momentum, the 3-day weekend. There's a lot of things that are going to play into the overall price action, especially this, which is why I showed you it. The fact that it is up 11% on the German market as it sits right now. That's massive, right? This is something that is going to contribute to nice bullish price action. You can't predict, and you can't analyze FOMO buying, momentum, and hype behind a stock, right? That acts as a news catalyst. A news catalyst will always outweigh technical analysis. That's why it's incredibly hard to actually analyze a squeeze when it is happening, right? But we can give you predictions based on what could happen just based on the fact that it hasn't started squeezing yet. So I can see it doing two things. I think either A, Tuesday you're going to have so much FOMO, so much momentum, so much hype built over this 3-day weekend, the psychology piece of this, right? That you're going to get a clean break over this $30 level of resistance. I think if it breaks it's going to test that and either A, break it immediately, or B, spend the day consolidating between a zone, right? Now, it might not break $30 on that first test, but what I will tell you is this, right? If it does not break $30, I don't think it's going to break down below 25. And if it does, it's not going to be for a whole day. Maybe 24, 23, 22 bucks is going to bounce back up, be a false breakdown underneath $25. But this is a pretty strong consolidation zone. We've already seen twice that it's bounced off of and held on to this $25 level of support, which is absolutely massive, right? So if we don't get a clean break, which I think is the best case scenario, I think it's the most likely scenario just based on the FOMO, the hype, the momentum of the buyers out there, I think you're looking at consolidation for the day. I think you're just going to be looking at trading sideways between $25 and $30 for the overall stock, right? That's kind of what I think is going to be coming up. Those are the two scenarios that I've got. I really don't think you're going to see a breakdown underneath $25. But if we do, the absolute worst case scenario, right, you do have a little bit of support down here at about 23 bucks. So I'd imagine that if it does break down below this consolidation zone, you're going to have a nice level of support and a bounce off of this $23 level of support and ultimately come back and retest this $30 mark to ultimately come back and retest 36. I'll tell you this right now. A break over 36.72 is going to bring you each round $5 bill, right? You've got 40 bucks after that, 45 after that, 50 after that, and 50 is a huge psychological level of resistance. If you get a clean break over 50, and it's a 1 hour candle similar to this, right, that opens, closes beyond that level of resistance, you're going to be looking at freaking lights out $5, $10, $15, $20 swings. I mean, I think that is going to be a huge push to put some more pressure on these short positions and ultimately bring us to that next round psychological level of resistance, which is $100. 100 fucking schmeckles, my friends. Can you believe we're even talking about that right now? We've come so far over 5 months, my friends. Keep hodling on. I can almost guarantee you, I can't guarantee anything, obviously, because it's a stock market, but we are so close to the freaking end game. It makes me incredibly grateful that we've been on this freaking journey, and it is weeks away, in my opinion, from coming to fruition. And that's what I've got for the freaking video. So blah, blah, blah. I know the whole spiel. Drop a like, consider subscribing. Whatever you want to freaking do. My friends, my family, my fellow Gorilla Gang. Catch you on the next one. Much love and peace.